I don't want to ask for them to sell their facility. I want them to ask me to buy their facility. That's a simple way of looking at it and how I approach the conversation.
That's one of the major ways that a lot of individuals get around the down payment.
And including us. We'll buy it and we won't put nearly as much down. It'll dramatically shrink what we have to put down into a deal. Welcome everybody to Self-Storage Income, and we have a episode today brought by you guys. That's right. So we do this about, I don't know, once a month?
Yeah. Periodically.
Periodically we do this. We want to answer you guys' direct questions. It's a way to make sure that we can hit on the things that you guys are actually concerned about, worried about, or that you want to know. So you can do this by, if you're watching on our YouTube channel, jump in and ask the questions right below. We accumulate the questions and we put them all together so we can answer them here. If you guys are listening on, well, anywhere you listen to this podcast on, you can go ahead and just click the link, go to our site and email a bunch of questions for us and we will put them on the list. So hopefully we get to your guys' questions and we hit as many as we can. But Connor, let's knock them out.
Do this. All right. So a lot of our podcasts lately, we've been talking about how to start out, right?
Right.
Where you guys started back in the day, what your story was, all those things. And a lot of times, obviously, it starts with smaller facilities.
Yes.
So the first question here, Maurice 8120 is asking, where did you search for those smaller storage facilities? Which I think is a good question. Really help paint the picture on how to find those facilities, the process that you guys used. I think it's a lot less scientific than I think people assume that it might be. It's, at least in my experience looking at storage facilities in smaller markets and areas, but would love to get some insight from you, AJ, on back in the day, how did you find those small storage facilities and how, if I was starting out today or Maurice was starting out today, how would we find, a small storage facility to go invest in?
So there's a few reasons. And first, before you go out and try to find a storage facility, we try to really focus on and make it clear that you are looking in the right spot. And that is by identifying your buy box. So most people, if you're out looking for a storage deal or a deal, the question is what is that? So there's storage facilities all over the place, right? And you can buy lots of different facilities that are on market, off market, that you can network, find, that you can partner on. But that can be overwhelming because you may not know if you should or anything else unless you've clearly identified your buy box. And I identify buy box in 3 areas. So your buy box in the facility itself, the market, okay? So the facility, we talk about like the size, everything else, right? Then you have the overall market and then what you want out of it. So the facility, the size, how it operates. Then you have the market, the size, income, is it growing, is it not, is it a big market, small market, and then what you want out of it. And those 3 things combined, in the middle, you get your target, right? So think about your Venn diagram, taking these 3 things, boom, right in the middle is your target. From there, you now know where to look. And that is the majority of the problem that people have. They don't even know where to look. From there, we go to 3 main ways. We do networking, and that is locally, nationally, online. It's why we have our groups, everything else, which we do deals with and they do deals with in there. Then you have the brokers, which is a main source. Brokers can actually bring you off-market deals, but you give them a target, they can go find it. Then you have direct outreach. We're searching those individual markets that we've identified and we're listing out all the facilities and then finding the ones that meet that criteria. And then we're doing a direct outreach to them. And do this systematically. You build out a spreadsheet. You list all the markets, all the facilities. You list where they are, who owns them. You make a hit list, right? You be strategic. Then you go down it. It doesn't mean that they're immediately going to say yes or no. That's not the part. It's a process. And so when you're doing off-market deals, it is a longer runway. It's a process, and you need to identify a lot of them and be networking and getting with those owners. So those are the main ways that you should be out targeting to find a facility to buy.
Fantastic answer. Love it. Tons of great information. I'm going to actually take that a step further too on that specific individual outreach to the facilities or the owner themselves. On that first initial contact, let's say it's in person, over the phone, whatever it is, like how are you making the contact? Are you going to drive there and meet them in person, just like right off the bat? Or are you going to call them? How would you approach that very first interaction with the
If
owner?
they're local, I'll drive there. I do
Yeah.
it all the time. It's funny enough, me and my dad, we used to do this literally all the time. We would get in the car and we'd be like, oh yeah, we're just going to go talk business and we're going to go drive around and look at facilities. We'd stop in, try to find the owner, try to talk to him, try to buy the facility, and go to the next one. We used it as a plan to talk about business, what we wanted
Epic.
to do, how we wanted to grow, and we would just stop by facilities all over the place. We'd do it when we were traveling for other business. We'd stop in, and it was just something we did. We also, of course, called. We actually went out and systematically found the ones and we called. The key is when I'm making these approaches, though, I kind of do it differently. I don't want to ask for them to sell their facility. I want them to ask me to buy their facility. And that's a simple way of looking at it and how I approach the conversation. I try to avoid yes, no answers. So meaning that if I give them, if I say, hey, I want to buy your facility, would you be willing to sell me your facility? And this person doesn't know who I am. It's not a simple question. And you're asking them a whole lot of other questions. What you're really asking them is say, hey, I'd like to look at your financials. I would like to look at your facility. I'd like to take up all your time, your manager's time. I would like to even maybe put your business at risk from an employment standpoint with this point. I want you to disclose all your information and I want you to get into a contract with me to see if I would like to buy your facility. That's what they hear. And if I don't know you, I'm like, yeah, bro, I don't want to do any of that.
Right.
I don't know you. I may actually want to be selling it, but I don't know who you are. So it's actually way easier just to say no. And so I don't like doing that because the odds of them saying no are going to be way more likely.
For sure.
So instead, I want to cultivate a relationship. And then I want to get in a position with that conversation that they ask me to buy it. And you say, well, how do you do that? And I say, well, if I go there, we have a relationship. I'm not going to go directly out and ask them. I say, hey, I want to buy a facility in your market. Which one of your competitors do you think would be willing to sell to me? Mm-hmm. This creates FOMO. This also creates this idea that they're going to miss out on an opportunity and they have an opportunity cost. So if they are a seller, what we see is they'll say, well, hold on. If you're going to buy one of my competitors, why don't you buy me? Okay, well, maybe.
I love that. It's their idea.
Why don't you give me the information? I can see if we can make this work. If they don't want to sell it to me, guess what? I still get a lead anyways. They say, yeah, go down Bob. I know Bob's been struggling. He'll probably want to sell. Then when I go to Bob, guess what? I'm not asking Bob a direct question or anything else. I'm saying, hey, Bob, Steve told me that we should talk. It's now a warm introduction to a person that I know that wants to sell.
Fantastic. Dude, love it. Great information. All right, Maurice, you're ready to hit the ground running. All right, Jay Friedman, 8182. Is there a demand or research software or website for self-storage? I'm looking to get insight for the Atlanta sub-market.
So our main software sites are Radius and Yardi. Those are, really the main ones that people use. They're not perfect. They're not great. It should be a starting point, and that's it. The bigger the market is, the more accurate they will be. If you're looking at a market like Manhattan, if you're looking at a market like Austin, Texas proper, if you're looking at some big cities, California, things like that, most of the facilities will be out marketing online. They'll have all their information out there. So those software aggregators, the data aggregators, right, the databases, they can scrub it and so they can pull it. When you are in markets that don't have people that are actively giving out their information online, they have nothing to pull. So there will be holes in that. So they are a starting point, and those are the two main ones.
No, I love that. Talking demand, I think too, like you're talking about, they're a great starting point, but nothing beats the hands-on approach of secret shopping, getting in the market, actually going and visiting the facilities, talking to managers, talking to owners, really getting that insight in the market. Because I know we've shared this in the past, but it's worth mentioning again. There's a lot of information that we can see online on Radius. For example, seeing a market where there's 6 square feet per capita, seems like it's a great market. Maybe even 3 square feet per capita. But then you get to the market and find out that everybody's vacant. All the existing storage facilities, there's not a ton of demand. There's a lot of signs once you actually get there on the ground. That's an example that we've experienced ourselves in the past in a conversion we were looking at. Market looked amazing on paper, right? There was very low supply. Looked like it was ripe for the picking with this conversion project we were looking at. We got there to the market and there was just vacancy all over the place, even with low square feet per capita. So a lot of metrics can look great, but
nothing beats secret shopping.
Yeah, I was going to say, from a demand standpoint, AJ, what are your best practices for measuring demand in a market?
Correlation between occupancy and rates. If rates are going up and occupancy is still staying high, there's excess demand. If rates are dropping and vacancy is dropping, they are enticing potential new customers to come in by lowering their rates, and so you have a lack of demand, and you're waiting to see where that stabilizes. You're waiting to see where rates hit a bottom and where occupancies hit a bottom, and then you want to see that inverse. So the occupancy level, it can be full. Like, you can have somebody that's 100% full, but they may be getting 20 cents a square foot a month. And it's so cheap that people are like, yeah, sure, but they could try to lift rates. And every time they do, they're going to lose occupancy, and they can't make it up at that because the market won't pay for it, right? So the key is not just that they're full, but it is the relationship between excess demand. Will somebody be willing to pay more and come in to take that unit and fill it up? And we judge that by the rates relationship between occupancy. Are you a new self-storage investor and want to know what that facility is worth, what the risk is, how to underwrite it? Well, that's exactly what we do in a feasibility study. A feasibility study, we actually look at the market for you. We look at the finances, the underwriting, we show you where the upside is, the downside, and all the risk. That is actually what you can provide to banks to get capital and investors. It's a big worksheet which most banks actually require. So if you want to know what a storage facility is worth that you're looking at, come to us, follow the link in the show notes, and we will tell you.
There is a question on here about SBAs. I don't know if you might know this off the top of your head. Regarding financing, doesn't the SBA 504 allow for a 10% down payment versus the 30% mentioned? I don't want to talk to any SBA things personally. I don't have enough information on it.
They do, but here's the problem. The DCR, so the debt coverage ratio. So even though you could put 10% down, a lot of times you can't finance at those levels because interest rates are so high that your debt coverage ratio is going to be so disproportionate you can't even make money. So the answer is yes, but that doesn't mean you're going to get it. And it doesn't mean that you can afford to take it.
Great overall point there. Moving on to the next question. How do I get the $100,000 down payment though? Must have been on a video we were talking about getting a down payment on something. So I think in general, how do you get a down payment?
Down payment, you can save yourself and get it. You can go to friends and family, or you can go get actual investors. So investors, but I break that up into friends, family, people that you know, or you are going out and networking and finding a funding partner, an actual strategic partner. There are other ways that you can get the down payment. There's debt options, there's hard money loans, there's different things like that. In today's market, those options are difficult to do. Another way and route, though, you can go about it is seller financing and having them bridge the gap. That can also work. So those are your three main ways. And one way, shape, or form, you have an investor. That may be people that you know versus actual money partners. You have close networks, friends and family, right? Then you have our more of our bridge. You have our debt products. And then you have the actual structure of the loan, seller financing. There can be seller financing mixed with different loan products that they already have that you assume. So those are the three main buckets of strategies that we use.
I love that you mentioned creative finance because that's one of the major ways that a lot of individuals get around the down payment.
And including us. We'll buy it and we won't put nearly as much down. It'll dramatically shrink what we have to put down into it.
Exactly. And in better terms, for everybody through and through. The other thing too that reminds me a little bit, we talked about this on the last podcast, about that mindset of raising capital where you're essentially not, because with this mindset of, well, how do I get that? It makes me think of those individuals out there who are thinking like, well, I've got to go ask someone for money now, where you framed it in a really good way in our last podcast about providing the opportunity.
Yes.
Not asking for money, you're providing an opportunity.
I don't want to ask people for money.
Yes.
Instead, I want to offer opportunities that they may be interested in. I'm not asking them for money, though. And I'm sharing opportunities that I have with others. And that is something that people want. They want opportunity. Money is looking for opportunity. So what you do is you find and you create opportunities, and then money follows.
Dude, love it. Love it. All right. You guys mentioned a few times that you like to have facilities up to your operating standards in 30 to 60 days. This is by, you'll love this name, Blazing Sasquatch.
Love that. That's awesome.
Where can I just imagine like a redheaded Sasquatch.
Yeah, I absolutely. Definitely a redheaded Sasquatch running around out there.
100%. Where can I learn more about your standards post-acquisition?
So we have a YouTube video. I know that we cover some of these things. Now, our post-acquisition onboarding method, that is going to depend on a lot of different things. Size of the facility, what our strategy is. We have made a YouTube video. I know that includes it. We'll have to look back and see the exact one. But why don't you give an overview of what we do when we take over the facility, considering that's what you do?
Yes. No, that sounds great. And to that point, in our inner circle as well, this is something that during our meetings we talk a lot about.
A lot about.
We
and
say,
give
okay,
all our worksheets, everything else associated with it.
Exactly. So and we just recently, we've kind of revamped our onboarding checklist that is so detailed and so amazing. Like I love looking at it. It's amazing. I never thought I'd like looking at Excel sheets, but when you have talented people doing amazing things, it's amazing what you can get interested in. But all said and done, when we take over a facility, there's a lot of things that we're looking at. Obviously, a huge part of our operation is value add, right? Our goal is to go in, improve value. And we do that through operations. We do that through CapEx. We do that through our online presence, all of those things. So when we go in, we're acquiring a facility. We just did this recently. We closed on a facility just a few weeks ago. We onboard that facility. We're taking control of the Google listing. We're taking control of the website. We're setting up our own website. We're setting up the property management system. We're getting obviously utilities, internet, all those things, set up day one, right? We also obviously prior to that closing, we're also training and working with the existing management or staff at that location, interviewing them, making sure they're going to be a good fit or not, and being able to hire someone and have them plugged in and ready to go day one of close. Another super important aspect there, having a really good understanding of where rates are currently for their different unit types, getting all the reports you need prior to close, and then overlaying your process and business plan to that and seeing where you're going to be able to take things at that point in time upon close. Really, really important piece when we close. Several years ago, we had closed on a property that didn't end up having any leases, and it took us months to figure out a process to be able to get rate increases and manage tenants because there was no leases, contact information. It was like a fiasco. So that changed a lot of processes for us internally to not only identify and vet leases prior to closing and make sure that we have all, if not a majority of them, and be able to have a plan of attack going in if we are missing leases and or being able to get leases prior to close, which is even more ideal. But with that, we've implemented a process where we send out an announcement of new ownership the day of close. So we're introducing who we are, our brand name, what we're going to be doing, and contact information. Another really important piece is we're huge on auto pay. We want to get as many people on auto pay as possible for a number of reasons. It really helps out with delinquencies, really helps out with people moving out, due to rate increases, right? It really, really reduces the amount of people that are actively seeing rate increases consistently, those kinds of things. So really, really important for us to get people on auto pay. So we include information on how they can get on auto pay, all of those things. Again, it's an introductory piece of communication that goes out to them. And then included in that communication is also, going back to the lease issue we ran into, is a statement in there that essentially says, hey, upon this date, you will have, if you're still a tenant with us on such and such date, you are now subject to the terms of our existing lease, and that's it. So that's not verbatim. Don't just copy that and throw it into your leases. Obviously, consult with your legal professionals out there. A little disclaimer there, but a couple really big pieces that we have going on there. Obviously, we're setting up all of the vendors, contractors, service providers that we need to set up for landscaping, HVACs, for gates, all of those. We want to have preferred vendor lists for our staff to use at that location if they have a gate issue, a camera issue, any of those things. Setting those things up immediately is huge. And all said and done, at a high level, that's a lot of what we're looking at, day one, week one, going in, getting a facility onboarded. We've got all the CapEx planned out. We've got actual proposals, bids lined up, ready to execute day one. Signage, obviously, another big one, getting that stuff squared away and done. So that first 30 to 60 days, you're doing a lot of organizing a lot of the CapEx projects, getting those done, getting those moving, getting those completed, and also just getting that facility onboarded and under your control through and through. There's going to be a lot of hiccups. There's going to be a lot of things that happen regardless of how much planning you do. There's always going to be something. So, like, for example, one of our most recent acquisitions, we have an office that's attached to an apartment living quarters, and everything that controls, so like HVAC, all the things that is controlled in that space isn't in the office. It's actually in the apartment. So there's little nuances where we've got to figure out, okay, well, now we need to actually transition where the thermostat is or where these little things are. So there's little things that you're going to end up finding when you transition. But high level, those are a lot of the things that we're looking at when we transition and getting a facility on board with us.
Technology is the name of the game, and how you operate your facility and the efficiency at which you can operate will depend on the technology you use. Your property management system, what it allows you to do, and what you have access will determine the outcome of how that facility performs. That's why we go with Tenant Inc. with their product Hummingbird, because they are the best in class. When dealing with automation, when dealing with move-ins, customer acquisition process, improving my online acquisition process, they are bar none the best. So if you are looking to automate your facility or operate it in a best-in-class way, make sure you guys are looking at Tenant Inc. and their product Hummingbird. The link is in the description.
Anthony Wood, 8587. Have anyone tried living in your units? That's been a serious problem at some urban locations. No, they never do that.
Never. It's never happened.
Zero issues.
Yes, all the time. Yes.
It's an ongoing issue for sure.
Yes, always.
It's a zero tolerance thing. Make sure your staff knows.
It's against the law. Yeah. Literally, if it happens and the burned down or they got hurt or something like that, you'd be in a lot of trouble.
100%. So get them out of there. Zero tolerance. Don't take any nonsense. If you think they're living in it, get them the heck out of there. You don't need that nonsense going on at your facility. TC6984, do you help others with pre-buy, like due diligence for the buyer, including turnaround if acquired?
We do feasibility studies.
We do a lot of that.
Yep. We do a lot of that. We do feasibility studies. You can follow the link below, which we analyze demand. We look at the market. Those are feasibility studies that can be provided to the banks, and lots of banks will require them. And we talk about rates, rate management, projections, market research, competitor analysis, all of it. So yes, we do. Check out the link below.
Well, and again, too, going back to our group, self-storage income inner circle. I mean, we're having meetings all the time, talking to people about how to do everything. Mm-hmm. So great question. Marky Crosby. So the fifth step, ranking the facilities compared best and worst locations and management. How do you quickly determine how well a facility is being managed for a competitive list without getting details of that facility? Since making this list is done from afar to then determine which ones you want to look into more, I'm confused about how you determine step 5 ranking. Thanks for clarification. Awesome video. It looks like somebody replied to this. It said, yes, how are you determining the upside especially when it comes to management prior to getting financials on the property?
So management is really, we look at two sides. We look at online and then customer service. So by looking at online and seeing what they're doing, how they're doing it, then actually calling the facilities. You can do that from far. Do they answer the phone? Do they help out? Mm-hmm. How helpful are they? How are they pricing units? I look at Google Earth and I look at the quality of the assets. A lot of that can be done.
Oh, for sure.
You can tell actually pretty quickly how you're interacting with the company itself from afar, and what you're seeing online are huge flags, whether they're doing a good job or they're not. And some facilities, it's actually hard to rent from. That's a pretty good indicator that they're doing a bad job. Right. You can't even get a hold of them, and you're not sure how to rent. So whereas other ones, they're Johnny on the spot, they pick up the phone, they're ready to go, they're giving discounts, they're looking at here, you look at their online rates and they're giving specials. It's easy to use their online. You're like, they're on top of it. You call them up after hours, somebody answers the phone, you're going, okay, these guys, they're on top of it. They're capturing those leads. They're probably doing revenue management. There's all these things going on. So they're running a good shop.
Yep, exactly. There's a lot of tall tale signs like that. Look at it from a consumer standpoint. Again, going back to secret shopping, a lot of that can be done from anywhere. And again, if you're calling a facility, you're getting great service and they have a great product, it's probably they're running the facility well, versus if you're not getting a follow up from them, if you call and they you want a 10 by 10 and they're like, yeah, we don't have any of those. And you're like, oh, okay.
Okay. Anything else? Buy, I guess, yeah. Right? They're not upselling. They're not.
Exactly.
There's no service at all. It's just like, no, go away.
Right. Yeah. And again, going back to the online presence is huge. Do they have Google reviews? Do they not?
Yeah.
And again, so much of this too goes back to like, what's your value proposition? What are you going to do with that facility once you actually onboard it? And what skill set and tools and everything are you going to apply to actually drive value of that facility? And again, too, going back to occupancies, going back to rates, are the rates below other facilities in the market, or is the occupancy below? Are there ways that you can improve that facility's value, perceived value? That's another big one. Can you just go and can you paint a few bollards and make it look like a freaking brand new facility for a couple $100? Like, super simple stuff there. Next question, M. Mobley 1. How did you raise revenue $28,000 a month without expansion after the initial purchase? It's from our video, My Most Profitable Self-Storage Investing Strategy with Numbers. I don't know if you know what facility specifically they're talking about.
I think they're talking about Hayden, and it wasn't 28,000. It was originally at 16, and I think we went to 28. And what we did on that one was it was occupancy combined with revenue management. They had everything below old. They had like 10+% delinquencies. The manager had been giving away units and pocketing the money. So there was probably 15% of gross revenue that was like not being collected. So right there immediately, 15% gross revenue increase. Then from there, we found units. The manager didn't ever want to deal with tenants, so she would never give rate increases. Exactly. Nothing would ever happen. So you would have one unit that was worth $200, and somebody had been in there for 5 years paying $50. And so it was all over the place. They had no insurance. They had no fees. They had, it was literally cleaning up, operating that, getting everybody to actual rates, and then, that was pretty much it. That's kind of the process we went through. But delinquencies alone, just on that part, we're talking like 15%. That and pocketed or off air quotations, cite your payments.
All the cash that doesn't exist. Cash payments. But yeah, all said and done, that is totally not outside of the norm of possibility. No. I know like 28,000 probably sounds like a lot to a lot of people for a lot of reasons. Especially like in business in general, there's not a lot of real estate or businesses you can go out and just immediately increase, $30K in a month in value. But in storage, that absolutely is a possibility to go in, and again, whether it's rate increases that just haven't happened, or there's just a huge amount of money left on the table. Our one of our facilities here in Boise is a really great example of that. Where
I can't even remember what it was, 90 some or 70 something percent. We had some rates that were 200%. They were 10 years behind the market.
Yeah.
Like, and two, then they weren't collecting. They wouldn't actively go after and do collections or cash management. So we essentially got a 60% increase in the gross revenue in a matter of months.
Right. Well, and two, I think you got to remember how many doors too that a lot of these facilities.
Yeah, that was what 650 doors or something like that. Crazy. Yeah. So I mean, this is a lot. This is you're talking about almost 85,000, 90,000 net rentable square feet in a second tier market, growing downtown almost second tier market. So.
Yeah. So totally not outside the norm, guys. This is the power of self-storage. It's an amazing investment vehicle, and it can be if it's done right. And it sounds like we found a great deal. We need more of them. Let's keep hammering those down. All right, last question. Lucas Veldman, 284. After 3 years of use, how does the Nokē lock system hold up? It's a great question. Great question.
So Nokē, when Janus International bought Nokē and we're going to roll it out into storage, they started with a few sites that was, let's call them Project Zeros. We were a Project Zero. That means we weren't even first generation. Okay, we were completely test model out, and I joke with Janus about this, and I joke with Nokē about this because it was a total crapshoot, right? Because they didn't know what they were doing. We didn't either. It was brand new.
Yeah.
It wasn't that they should have, or they didn't. Literally, we did this on something that had like, how many exits and entrances do we have? Like 15? This was a conversion of a massive bankrupt Kmart. You're talking about 130,000 square feet. I think there was 900 units over this ginormous building. And then we decided on a facility that size with a road that literally goes through the middle of the building.
Right.
And you have entrances and exits everywhere. We had 3 gates.
Yeah.
4 gates. We had the 2 in the front, one on the side, and then the other one that you have to go through on the other side.
Yeah.
So, this is wild, right?
And the big speed doors in
the
building,
speed doors in the middle bays.
Yeah.
So then we have middle speed bays. Yeah, we decided to test a project, which they had to wire to each door. So that was rough, obviously, and getting it to work, everything else like that. Now, this is like 6 years ago, everybody. I can't remember now.
Yeah.
This is a while ago, right? 6 years? 5 years? Like 5, 6 years?
It's got to be closer to like 8, maybe.
It's wild.
It's a long time ago.
They have changed so dramatically. So when you're looking at these new products that are coming in, they're nothing like the old generations. That's first and foremost. Hard wiring, all that kind of stuff, no. So the Nokē ones that we have installed over 3 years, they still work. They're all working and everything. I'm trying to think of the problems that we would have had with that generation, because they fix it every year. They have like a new generation. They're better.
Yes.
But all of our Nokē's still in and it's still working.
No, and if we've had issues, we did have some issues with some battery-powered, one of their versions that didn't really quite get off the ground. It was kind of, again, it was like a newer technology, battery-operated.
We like to be the test dummies.
Yeah, exactly.
We're comfortable being dumb. So.
Exactly. So we'd plugged those in. Those ended up not working out well. And again, they've come out with new battery-operated systems that we're implementing at facilities right now today. They're Nokē One Latch.
Yeah, we have them in all the ones we're building.
Yeah, no, exactly. So we, but obviously we connected with Janus, with Nokē on the issues that we experience, and we get them addressed in one way, shape, or form.
Yep.
There's never been a time that we implemented the technology and decided against it. It's a huge amount of value for us in a number of ways, operationally, and there are companies out there that are trying to compete, but they're still they're still top dog in my opinion.
Yes.
They have the best product in my opinion, and they continue to do
because
really
they've been
well.
through all the generations and mess ups.
Oh, for sure.
So it's just part of being early to the game.
Yeah, and they've got the full suite of stuff, right? They've got their R3 program that does the refurbishing of facilities, you know, with the siding, roofing, doors, all the stuff. They do the doors. They've done a really good job of
integrating it all.
Exactly, being very vertically integrated. So great products, great systems. I mean, like everybody, they're freaking busy.
Yeah,
but
and like this is going to be a problem that you're going to have on the service side, right? Making sure they stay on top of things. That is across the board. That's not even necessarily a them problem.
For sure.
If you have a builder, if you have contractors, that comes with the territory, everybody.
100%.
Get ready for it. They are busy. Storage is and has been booming. It hasn't slowed down for these vendors. So
Exactly.
that's the disclaimer on it.
Yeah.
You get ready to manage them and to handle it. And if you're not willing to do that, well, you shouldn't probably be working with any contractors at that point, but that kind of comes with the territory. The next thing that I do want to mention, though, everybody, is this is technology. You will have issues. I don't care who you use.
100%.
There's going to be customers that maybe don't get it. You have to train your managers. If you're expecting, I don't want it to be like, oh, you just throw these things on and it's just magic, right? Because I've seen that sometimes. It's like, no, it's part of your new operating system. And you have to be trained in it, and you have to be ready for it and to train your customers in it. That's my disclaimer on it. It's nothing to do with Janus. It's to do with changing the operating system and using technology in every single door with every single tenant. It just comes with the territory.
Exactly right. Exactly right. And that territory has changed fast, man, over the last
really fast
5 years, even. If you're not building for the future, you're already behind.
You're way behind.
This is kind of the kind of stuff that you need to be thinking about. Asking the good questions about Nokē, about new technologies coming out, because the landscape's changing. It happens very fast. So
everybody, jump in with more questions. We love targeting these things. What you guys are asking, especially now, they tend to be really relevant. Relevant. I can say that word. It's in the afternoon, everybody.
Well, hey, you've been stressed because you've been looking at a ton of words with your new book.
That's right. Which now we've hit bestseller in like 3 categories, by the way. I apologize to everyone how big it is. It's ridiculous. People are getting it. They're just like, holy cow, this is a textbook. It is. We put like everything in it. It is just a lunk. Like,
it's
holy crap.
insane to see the difference of this book versus the first one.
Oh,
this one is so, I know like people do expanded versions and come out with their 2.0 books, you know, but
this is a new book.
Totally.
Literally, it's a new book.
I mean, yeah, it's hard to even call it a 2.0.
Yeah, it really is.
It's, I mean, through and through, so much more information, very granular. From what I've seen, I haven't gone through the whole thing yet, but it's just absolutely incredible. The entire team, I mean, and
we
just
worked endlessly on this.
Unbelievable amount of work that went into this thing, and so
crazy.
excited to see this thing out there now. So you guys make sure and pick it up. We'll put the link in the show notes for that as well. Growing Wealth in Self-Storage.
We have our discount to it. You can get the discount if you guys leave us a great review, email it in. We talked about that on the last podcast, but if you guys do that, we're sending you, I think they have an offer for like the next month where it's like a 10-hour course on storage.
Oh, heck
it's
yeah.
pretty amazing.
Let's do it.
So leave us a review. Let us know.
Thanks, everybody. We'll catch you next time.
See ya.